In Part 3 of Problem 1-7b, you are asked to prepare the financial statements for this company, Benton's Maintenance. Now remember, the financial statements must be prepared in a certain order, with your income statement being prepared first, followed by your statement of retained earnings, followed by your balance sheet, and ultimately your statement of cash flows. So we'll go ahead and start off with our income statement. And again, the solution file is posted on Blackboard for your convenience if this is difficult to view. So what I want to point out is that you have a header here. You have a 3-line header for each financial statement, starting with the name of the company, followed by the name of the statement, and finally the time period that's covered. Note that this is the order that must be followed. If you were to put the name of the statement first or the date first, the entire heading would be wrong and it would result in a loss of points on your exams. So please get comfortable with the format, because even though now on your homework a lot of times the heading is filled in for you, when you go through the exam you're going to need to prepare all that from scratch. So make sure you're comfortable with that. Name of company, name of statement, time period covered. And again, for your income statement and statement of retained earnings, it's always proper format to say for month ended. If you were to just put June 30th, that would not be correct. You need to have the right verbiage because the income statement covers a period of time, not just a single point in time. So we'll start with our header. We know that the income statement is the financial report that shows a company's income and expenses for the period, so we'll go ahead and start off with revenue. So you're going to list all of the company's revenue for the period. Our company just had one type of revenue, and it was their maintenance service revenue, $11,400. Well, where did you get that figure from? If you go back to your transaction analysis, you can see that your revenue for the month of June was $11,400 when you sum up all of your revenues. Okay, so you just pull that figure down, follow it by all of your expenses. Rent expense, the $2,200, that occurred on June 2nd. The $1,620, that's the sum of the two amounts of $810 that were paid to your assistant. Next you had advertising expense, which also was the sum of $780 and $80. You had telephone and utilities. So you're just going to list all of your expenses. Your total expenses should agree to that on your transaction analysis. So we have total expenses of $52.30. Let's go ahead and make sure that agrees. Indeed it does, $52.30. Subtract all of your expenses from your revenue to get the company's net income. Note that the net income is the final product that we're looking for in this financial report, and therefore has a double rule underneath that figure. So again, you do want to pay attention to the format. You'll note that expenses aren't listed first. It's always revenue, followed by expenses, net income, with a double rule under that final product. Once you complete the income statement, you can go on to your statement of retained earnings. Again, starting with your header, name of the company, name of the statement for the time period covered. Both the retained earnings and income statement have the for-month ended phrasing before the time period. We start with your beginning balance. Since this was a new company, they had no previous retained earnings, so you can go ahead and list 0 there. Your retained earnings is increased for the company's net income. Well, what was the net income? That comes from the income statement. That's why it's important the order that we present these statements in. So that's just going to get carried right down here, $61.70. You can do a little subtotal here, that's fine. And then you subtract any dividends that were paid out. Dividends that were paid out, that occurred on June 29th of $1,600 from Part 2. So go ahead and write that down, subtract it from your net income to get your ending retained earnings balance. And again, since that's what we're looking for, note the double rule underneath that product. That's your second statement. Now we're able to complete our third, or the balance sheet. Name of the company, name of the statement. Notice here for the time period, it doesn't have the for the month ended June 30th. It's simply the last day of the month for this company. because unlike the previous two statements, the balance sheet is not for a time period, it's a point in time. Okay, so do remember that, as it will make a difference. Your balance sheet shows all of the company's assets, liabilities, and owner's equity, and of course the goal is that it will balance, hence why it's called a balance sheet. So we'll start with all of our assets, all of the resources owned by the company, and we get that again from our transaction analysis. We can see our cash at the end of the month was the $43,790, so we go ahead and put that in. We had no accounts receivable left outstanding, so you don't need to include it at all, that's why it's omitted. And then you had the equipment of $18,660. Add that up to get the company's total assets of $45,650. Then we go on to liabilities, $80. And again, we can see that here from our transaction analysis, $80. Common stock, $41,000, which was the amount contributed by the owner on June 1st. Retained earnings of $45.70. Well, where did that come from? That came from your statement of retained earnings. Go ahead and add all that up. You should get $45,650, and both sides being in balance. Note that you do not need to do the statement of cash flows for this problem. We will be spending an entire chapter on the statement of cash flows in chapter 12. So at this point, you've completed your practice problem of 1-7B.